What's up, family? Welcome to yet another valuable video. Today I'm going to be talking about smart money layout. This is going to be part 2 of that video I did. The first part where I was talking about how to identify reversals of the market. Now we want to talk about trend following. So how can you trade within the trend following a bullish market or a bearish market? How can you take advantage of that? I have already done a full series. This is just me putting everything together to clarify and solidify this concept that you may be a full smart money trader, that you may conquer this markets and make money. So make sure to watch this video till the end, and also to like and share this with your other friends and family. God bless you. Let's jump into the content right now. Okay, family, we are on the chart right now. I just want to lay out the foundation just before we can go into the actual chart for examples. So I'm going to need your utmost concentration, family. And of course, those who are planning to buy the course, if you cannot concentrate on a very simple free video, how about in a paid mentorship? So you're going to need to give it your all, learn through the free content that I'm offering, so that by the time you get to invest, you have already the mindset of a learner. Okay, so as you know, previously I spoke about reversals, which was identifying a change of character, which is basically taking the previous higher low. When the market breaks it, we can say that's a change of character. And of course, that will validate that we have now our trend, which will be in a bearish trend, as we've already concluded. Now, I want to speak about types of entries within a trend following strategy or method of trading. So the first thing that I normally do as soon as I identify that the market is either created or a change character is I would want to highlight, in fact, that high that it has created. And probably I will also want to highlight the low that the market had created in the previous trend. So let's say this was this point right here. I'll highlight that low to create kind of sort of a room. And I like to highlight that on a bigger time frame, so more like H1 or H4, preferably any one that you see that's higher for your style of trading. We will go deeper into other episodes with different styles of trading, and I'm referring to scalping and swing trading. Those are what I refer to, different classes of trading rather. So right now, this is not based on any time frame. This is just based on the concept itself, right? So once you've identified these three things, your change of character, your high and low of that whole trend, previous trend, because you're not starting and assuming that this trend was not already there. So right now, what we can get out of a trend, we can get what we call POIs, that meaning supply and demand. In the case of a downtrend, we're expecting supplies. In the case of a bullish trend, we are expecting demand levels. Okay, I hope you understand that. Okay, and I did teach on the previous episode, so that's why I'm not gonna zero in much on this. You need to watch the whole playlist for you to understand. And another important thing is basically, in fact, I'm just gonna highlight as I'm just saying this. Okay, so POIs are very much different. This can be areas where the market, of course, in the middle of an impulse move can create a supply, or it can also be where the market basically gives us a supply right at a higher low, or rather a lower high in that case, to kind of really create something where the market will come back and mitigate that. Okay, so that can be a POI. And of course, we do have OBs. It's an order block whereby we can see the market, let's say it does away where it lures in traders. So let's say this was created an OB right here. It lures in traders to think we're going up, and what happens, the market tanks down, bringing in smart money, and the market brings it back and sells it even much harder on the OB. So just adjust my diagram over here. Okay, this is just textbook style. Okay, we can have a POI within the middle of the trend. Okay, and of course, another point of entry can be fair value gaps, famously known by ITC students. Okay, fair value gaps, or what we can also refer to as an imbalance. So let me just get that. A fair value gap is basically where I understand that the market creates an imbalance or basically insufficient price of candles and therefore creates a gap, and we want to fill that gap, or the market will want to fill it again. So basically, if there are long candles within this range right here, the market will typically take the previous candle before the long candle, so the close of that candle and the opening of the candle after that. So let me just create an example here. I will show you. So let's say we had but long candles right here, or small candle. We have a long candle like this that appears to be like a news candle, or we can call it an engulfing candle if you want. I just call it a momentum candle, right? Then we have another small candle like this. So normally when we have this piece of price action, we need to have a wick that closes this candle, that creates sufficient price. Because if we're selling, that means this will be the high, this will be the low. And of course, if we're opening on the low of the low, that means we're having equilibrium. In that sense, we need to go and cover that again. So therefore, we have what we call a fair value gap. I can just take it here. I've put this, and we typically take the close of that candle and the opening of that candle to create the fair value gap. But in most cases, you won't put this. You just take your Fibonacci. I've already customized mine. You take it all the way and you highlight your 50%. So that means this will be my 0, and of course in the middle. And most of the time the market will come back to mitigate that 50% to fill in this whole candle or momentum candle. So those are the 3 types of entries. With POIs, with OBs, we have fair value gaps or imbalances, the very same thing. Now the trick is here that one needs to master what really validates a trend. We've already established what validates a reversal. So now we need to establish what validates a trend. What shows you that the market is still going to go in the direction of that trend that you anticipated due to the change of character. Now we have what we call a BOS, right? Break of structure. That's simply what it means. Break of structure. That means that we have lower lows in this case over here. Therefore, when the market breaks those lower lows, we call it a BOS. That simply indicates to us as traders that the market is actually validating structure. So it's breaking structure to show us that it's going to create a lower high in order to create a new lower low. That's simply the whole theory behind a BOS. So let's say after the market breaks that change of character, which is a previous high low, you will anticipate the market to pull back or to give you an exhaustion, because we have an impulse, pull back, impulse, pull back, impulse, pull back. That's how the market moves, imprinting lower lows and lower highs, right? So within that same example, the market, the moment it breaks any BOS or any change of character, you're gonna anticipate it to pull back to any of the zones. It may be a POI right here, as I've just drawn it there, or it may be an order block as soon as it breaks another break of structure. So as soon as we break a lower low, it will now want to pull back in order to get to any form of price action. So in this case, let's say we have an order block. And of course, you play along with the market, you follow it. As soon as, of course, I won't really zero in much into the types of entries. I will show you guys on the chart, but in terms of laying its foundation, I've already done that on the previous videos. Please go watch that, guys. Okay, so as you can see, this will be my layout until the market breaks that previous low from that trend. Once the market breaks that previous low, for example, let's say it was this low, then this low for me becomes a lower low and becomes a break of structure, where now I anticipate the market to either break in and come back to either touch any entry level to sell, or it will give me a new higher high. Then when we break it, then we are actually starting something like this, where we are now again within a bullish market. And the very same thing, we want to see a change of character, guys. If you don't have the patience to watch this video, how are you then going to learn? So keep on watching, have the patience, take your time, take the notes, guys. Okay, so we have a POS that validates we're in an uptrend. The market pulls back, probably let's say it's pulling back to a POI, which would be in that case a demand level that we're talking about, right? And of course, again, it does that, creates a new higher high where the BOS right there, the market pulls back, let's say it's pulling back to another demand area. Okay, that's exactly how you always gonna trade this. Don't look for any type of magician or whatsoever. It's quite simple to approach the markets. Maybe it's gonna make more sense as I go into the live markets or the chart to kind of really show you and play it back for you, so that you can learn exactly what goes on into the markets. And family, you only gonna get better through practice and back testing. If you're not gonna just watch this and just like, okay, I've got the concept, and you want to apply it straight away in the real markets, you have not yet made your mind to adjust to the style of trading. So you have not yet practiced it on the demo, therefore you cannot really apply it. So you need to backtest, practice this method, then go on a real account once you've seen your own results. Do we understand each other? Okay, let's go to the next point where we're actually going on the chart right now to go and identify all of this. Hey family, as you can see, this is the chart. I went to the British pound over here just to get this example for you. This works on any pair, by the way, and any time frame whatsoever. So I normally just go to the H1. You can use my own method because I'm an intraday trader. That means I day trade. That means I close my trades within the same day that I've executed them. So I can hold for hours, I can hold for minutes, I can hold for seconds sometimes, right? So just to go back to this concept again, I want to take the high. There we go. I'll go back to the previous trend and I'll take the low. So this is actually the live market of this week. Okay, and I'll take the low right at the week. Okay, so you can see the high and the low right there. Once that is highlighted, as you can see, this is everything that we are able to see. I can even start here previously as this trend has just started over here. I'm gonna just play it back for you and we're gonna learn from that. So welcome all of you guys, my students. You're in class right now. Okay, let's go to that low and I just want to teach you from it. I know it's hindsight, that means it has already taken place, so our bias is already created. That cannot be the same thing that you can replicate in the markets. I completely understand, but it's just for you to understand the concept and apply it therefore in the markets. So as you can see right here, we do have the market that was in a downtrend. Now we are starting an uptrend. How do I know that? We do have the last lower low that the market, or lower high that the market broke over here with this bullish market. Therefore we can now go to it and draw it for us there. So we have our change of character. Okay, and of course, once we've seen our change of character, the market is broken, now we can anticipate anything. Okay, you can also switch time frames. So I'm just gonna play it back even more. You can also switch time frames to kind of really see other concepts, especially if you're gonna enter on a smaller time frame, okay, or intraday. So you can see our change of character is more visible right now on an M5. The market breaks that, pulls back, and as soon as it pulls back, this is the higher low that the market creates, and therefore we can take that as our supply. If you have not watched the previous videos, you're gonna be confused on how to do this. And of course, as you can see, that supply, that's where the market, again, we had the change of character, we had the market now giving us a BOS, so break of structure, to still tell us that we are going up. So once we're going up the market, when it pulls back to create another higher low, it's likely, or it's most likely gonna come back to what? To this POI. Let me just mark it again with everything that you guys may understand over here. I know this is a long video, but it's worth it. Okay, it comes back. As soon as it comes back, you can either put a buy limit, or you can just wait manually to enter the trade. And of course, you can just enter there and anticipate that the market will now create a new higher high. Okay, and of course that's what we actually see happening right here as we can play that. Now as it begins to now create a new high, what happens? We have the break of structure again. So the moment we break a new high, what we can highlight another POI over here. Okay, we have other POIs, so it can actually take liquidity. One thing that I'll advise you guys, don't take POIs that are normally attached to technical levels or retail trading levels. So this is a break and retest level. Most likely they will know that a lot of you guys would want to buy here on the supply, so therefore they might just shift it over here so that it may take liquidity of buyers here and use it to push the market up. So I'm going to highlight every single one of them, okay, and we'll just see where it goes. So let's play it back. Okay, so it did actually just respect that one, as you can see. So that buy came in, so we're still having our POIs respecting the market. And again, now we have the break of structure again. So they didn't push it all the way there. That's still fine because this was part of this whole retest that was going on. If we go on a 15-minute time frame, I'll understand why I didn't actually put it here. Now we have a POS again. I'm just not gonna go to the text, as you can see. Okay, and we keep on pushing. Where's our 1 hour? So what you could have potentially done when you're in this buy, you could have took the previous high, which was this one, right? So that you know where to stop and know where to stop buying and just observe the market. So in this case, again, we're still pushing up, okay? So with our BOS, we will mark our POIs, okay? Let me just use this previous one. As you can see, I'm gonna take this point right here and let's see if the market will pull back. You're not gonna always get it perfect. Can see the market did actually create a gap. It just left off without coming back to this point. You probably missed the trade. It's still fine. Okay, it may still come back again to that POI that it actually didn't come back to. Okay, now we also do have another POI right here that the market is busy bouncing off, but probably was consolidating over there. I'm just using real market conditions here so that we may get this concept thereof. Okay, I just want to show you. Hopefully I can play this with more speed. Okay, just waiting, we're just waiting. So the market did actually just play around a little bit more before it can actually go to the upside, as you can see. But it was actually bouncing off this POI. And we can actually see what the market did. So sometimes if the market doesn't touch the POI that you anticipated, which was this one, after the market broke structure, this was the last higher low that the market created, and as you can see, the market did touch that and now it's going back all the way up. So sometimes don't be mad when the market doesn't come back all the way. It may come back the next day. So I have my period separators here that mark the days that passed. It came back the next day and the market started rallying all the way up. So sometimes don't be too sad when the market doesn't actually touch a level. And as you can see, the market broke that whole trend. Now, as you can see, it broke the previous high, and now we just want to chillax a bit and see what really happens. I'm going to go to the 1 hour as we're still playing it. So if it has broken that, that will be now my new BOS. And as you can see, it went all the way up, retesting that. Now that we have touched the point where I was talking about, which was what we highlighted because of the ability of hindsight, and that is what we're doing right now. Okay, so as you can see, because of hindsight, we've already traded buys. It's not going to be as perfect as I'm showing it, right? I'm cherry picking every example, but I'm just doing it for you to understand this concept. Now we go over here. It has created a new high. Probably it's a new day that you're trading in the markets. And again, the most important thing, do not overtrade. If you get 2 or 3 trades in the markets that you get right and you have risked correctly, that's it for you for that day. Go on and look for another day, because overtrading may make you very delusional because of the pride that fills you up, right? You get pumped up real quickly. Okay, so now we want to take this high. As you can see, we already know because of hindsight. I already know that, guys, so it's fine. Now I want to take the last higher low that the market created, and as you can see, that's quite obvious to the naked eye that we have this point right here, which was the higher low that the market began to break. Okay, so as the market broke that higher low, we can see what actually happened right here. It breaks that, and of course creates a new higher low, which the market just pulls back a bit. I wouldn't trade that, but we also break that having what we call a BOS. So it's important that you can get a BOS when you're trading with structure. You can also go to smaller time frames to get your entry. It's still all right. So once you've gotten your BOS, now you're going to anticipate the market to pull back. And as it pulls back, you highlight potential entries. Okay, I'm going to show you also a trick right here. So we do have this POI that the market created. In fact, we have an order block. So an order block is a candle that induces traders. So we have a bullish candle here, many of us could have bought. So that is an order block. That means just one candle that stands out that really affected the market. And as you can see, we had that BOS. When the market pulls back, it pulled back directly into it. Now you can use your Fibonacci, you mark from the high and of course all the way back to where the market started to pull back. And of course we have what we call premium markets, discount markets. You always want to trade zones that are above the discount markets. That means within the premium markets. Okay, so in this case, I knew very well that we should be selling over here, not below here. So when the market was pulling back, I wouldn't have traded this sell because it is still in a discount market. Therefore, I want to trade sells within a premium market. And as you can see, we do have that OB that was just created over here. I hope you guys understand what I'm saying. Okay, now we still move again. We have another BOS that the market, of course, does. And let's just see what happens. We have this POI, we have other POIs that the market is actually formed, and you can see why the market is actually selling there. Let's carry on. Okay, let's carry on and play this. Of course, we do have that break of structure. I'm just gonna mark it as one structure because it hit on all angles. Okay, now you're still gonna go back and put in again. So we're gonna take this order block and see what happens if the market is gonna get back all the way. And as you can see, when we put that order block, the market touched it, and let's see how it actually performs. So it broke that. It's still fine. You're not gonna get positives or profits only. So we may potentially see it actually coming back all the way to that previous OB. Let's see if it's just gonna tank all the way down. So one loss, profit, one loss. Let's see these profits coming in. This is trading within the trend. The market has not given you any change of character. Therefore, you cannot be looking for buys, but only sells. As you can see, that's what the market did over here. I just hope you understand, family. I'm just recouping everything that I covered within every single concept just to make it one with you. To say you follow the trend, you look for various types of entry points that you can identify within you trading smart money concept. Again, I repeat, OBs, supply or demand levels. You also need to validate structure with a BOS, as well as a change of structure with a chart of costs to validate the trend that has already started. And of course, you want to highlight the high and low. Once the market touches either the low or the high, then you can call it well done for the day, right? I hope you guys understand this. Do comment down below on what you saw in this video, what you've learned, and do apply it, of course, within your day-to-day trading. God bless you so much, guys. This is all from me, your brother in the kingdom, and I'm signing off.